Now, keep in mind, this forecasting model processes an enormous amount of data. I don't know what it's doing. I don't know what it's doing. It's like I created an algorithm that finds correlations, but it takes hours to run and find those correlations. And I don't know what they are. I don't know why it peaks. Like, I don't know why we have a peak, why we had a strong intensity on April 7th, for example, or August 6th of 2024. I have no idea. I can look into it, but usually it's like a long list of configurations are taking place on those specific dates. The list is so long, I don't care why it's why those dates are highlighted. I only care that they are. And pretty powerful. And the third date, which was major after July, after August, there was one final major date that was showing up on this forecasting model. And it was 3 days, and it was November 3 through November 5, this period here. This I couldn't help but notice that the middle of this period is a US election. I was like, huh. So the next important turning point, and there's a reason I'm bringing this up. So the next important turning point is on November 5. How come? I couldn't help but notice, oh, November 5 is the US election. This is between November 3 and November 5. And I thought, okay, well, obviously, and it was a forecast for a low. So I thought, well, this probably means that Trump's going to win the election. Yes, I thought based on this forecasting model that Trump was going to win the election. The reason for that is I thought, and I've been doing forecasts and I've been following forecasters long enough to know that if you have a forecasting model that is somewhat accurate, it will line up with things in the real world. Exhibit A is this August crash. This August crash wasn't out of the blue. It's not like nothing was happening. The stock market was crashing in this time period. It's because of the dollar was crashing against the yen. There was this yen unwind, and I can't remember why it was happening. Probably had something to do with rising rates in Japan, but I don't remember specifically what the trigger was. The point is that when these dates had high intensity, so it was a high reading on this forecasting model, then things happen in the real world. And I've been using cycles since 2012, and I've noticed that plenty of times you're expecting, trading gold, for example. I remember a lot of forecast dates, even using FLDs. These forecast dates would be on Wednesday when the FOMC has to make an interest rate decision. So a lot of those forecasts would land specifically on the day when the Fed chair had to decide on rate policy. So I was already familiar with the fact that these forecasts can and do line up with real world events. So we go to November, and in November, I notice, okay, we have this forecast for a low, and it happens to coincide with the US election. And the only reason I can see Bitcoin rallying strongly after the US election is because Donald Trump is going to win. And so that was my forecast for the election. It was based on this model. I thought Trump's going to win. And Bitcoin's going to surge. And that's exactly what happened. So Donald Trump wins the election on November, I think it was November 5. The actual election wasn't November 4. So this was between November 3 and November 5. So November 3, November 4, November 5 had the same reading on those 3 dates. And sure enough, he wins the election, Bitcoin surges.